Good day, everyone. I hope you're all doing all right. So, yes, this is my outlook for EURUSD and GBP/USD for the week, giving you my anticipations for my draw of liquidity for this week and my bias as well, aka directional bias of the weekly candle that we are proceeding into. So I will start on the monthly chart, right? Since we recently started a new month. Genuinely, if your monthly analysis is still alright, you should be starting from the weekly, but the monthly is also fine, especially since price made some has been making quite the moves lately, right? It's important to start from the monthly. So first things first is the order flow, right? We need to understand in what particular kind of algorithm is the market abiding to at the moment, right? So first things first, when looking at order flow, we consider the highs and lows, right, in the market, right? Highs and what? And lows. If lows are being rejected and highs are being broken, then we consider the market to be bullish. Another thing is imbalanced price action, aka FVGs. In a bullish market condition, you expect price to fill in the bullish fair value gaps and be propelled upwards. You expect the bullish fair value gaps to create expansions to the upside, like this one right here, which was quite bliss. Another thing is the up close and down close candles, right? In a bullish market condition, you expect down close candles to be broken and used as support for price, aka PDRAs. And once again, in a bullish market condition, the up close candles, you expect them to be broken and used as an inverted PDRA, right? That is important. And okay, that's enough. Another thing that I wanted to tell you is that don't let me sound vague when I talk of highs and lows, right? When I'm talking about highs and lows, I'm talking about swing points. I'm talking about range highs, range lows, and okay, range is it's a more broader word because you know that candles are even ranges. So when I talk of highs and lows, I'm also talking about candle highs and lows. So that also takes part in evaluating my order flow. So basically, you can see that euro, at least we can say that it has recently been bullish, right? Without adding on any thoughts of seeing a reversal, price has recently been bullish, and you can clearly see that price has been respecting this inverted PDRA, right? Achieving higher prices to the upside. But interestingly, of course, when I started this video, you saw that I had this key level right here, right? This is a 6 months FVG, right? or to just make it simply appealing, it's a higher time frame PDRA. That's what it is, right? So the laws of order flow say that the higher time frame is always confluential over the lower time frames. So your bullish fair value gap on the monthly is nothing compared to the bearish fair value gap on the what? On the 6 months time frame, right? Yes. And so since price has reached this key level, which is a higher time frame key level, I simply have to consider expecting this, for example, this bullish PDRA to be respected, to continue propelling price what? Upwards. And another thing is, you know that a higher time frame FVG is a lower time frame turtle soup. And a turtle soup, you know what it means, right? A turtle soup is the fuel, is the launch of a what? Of a reversal. It's the trigger for market to create huge reversals to the either the upside or the downside. And when I'm looking at order flow, I start to go in depth by looking at something that's more in between order flow, right? Which is range dynamics. What's interesting as well on the monthly chart is the creation of primarily this high and what? And this low. And since price created primarily this high and this low, this was back in 2022, right? 2022 created this low and that very, very high, and price has been ranging over the past 2 years, 2023, 2024, right? Creating multiple highs and multiple lows in between, simply generating interest from both sides of the market. And of course, this year, price purging the high, right? Simply giving me interest towards the 50% of this very range, and the very opposite end. And you can see that that down close candle that initiated this whole move, that is approximately where the 50% of the range is, which is my draw of liquidity. And price, there's also another concept for price that is called dealing range dynamics, dealing range mechanics, sorry. That simply revolves around that price never moves in a straight line. Every time price expands to the upside or expands to the downside, you expect price to balance that expansion to at least the equilibrium or to the premium or discount to continue with the order flow. And you can see that price is as recently been dealing within this dealing range or expansion swing, whatever I want to call it. and clearly showing us that we have sell side liquidity over here. And the most important question that you must ask yourself when demarcating your draw of liquidity is, how is price gonna reach this draw of liquidity? If you cannot find an answer for that, then less likely that draw of liquidity is gonna be reached, right? There must always be a terusu, or the mitigation of an important key level, like the one we are talking of, the 6 months FVG, and what else, which is this terusu as well on the monthly time frame, which can be a true initiation for price towards that draw of liquidity. So this makes this draw of liquidity logic, right? Not correct, but logic, right? It's all about being logic. You can never be either right or wrong, right? Because remember, when it comes to price analysis, you can be confident, but you can never be certain. Never, right? So like I said, price moves in order to at least attack a high or low, or to fill an imbalance. So since price has recently attacked this opposing high, I expect price to at least reach this fair value gap, fill it, go for the next one, reach the 50% of the range, and potentially the opposite end, right? Or at least working with this dealing range, at least expect to see price reach this fair value gap at the 50% of the range, right? This down close candle which purge liquid at the 50% of the range, dealing range, not range, dealing range, then price can continue with the order flow if it wants to, right? Excuse me. So on the monthly, ladies and gentlemen, this is my expectations for price. I expect price to be going down, right, towards this specific level before anything else. How will price reach this? I expect the higher time frame key level to be a propeller, or to be a cause for this. Now moving on to my monthly bias for EURUSD. June, first of all, it's seasonally bearish, right? Seasonally, it's bound to create lower prices than of May. And another typical character of June is that it's June is typically ranging most of the time. It's the middle of the year, so this is when you expect some serious consolidations and manipulations or reversals, right, to go in the true direction of the yearly candle. So June and July, they are choppy, but after July, price is smooth sailing, right? Seasonally, typically, right? Remember, I can be confident, but can never be most certain about what's gonna happen. So seasonally, June is bearish, and that's good because I have my draw of liquidity to the sell side. Then another thing on the monthly is quarterly shifts. Let's look at the past 3 months. 1, 2, 3, 4, 3 or 4 months. Last quarter, you can see that this quarter was clearly an expansion, towards what? Towards this higher time frame key level. We know that every quarter price shifts, makes huge shifts in order flow, or makes a new market profile. So based off the knowledge that we have about market profiles, we all know that if price reaches a key level, right, with an expansion, then you are most likely to either expect a range, right, or expect a retracement or a reversal. You cannot expect an expansion after an expansion. That's impossible. That's why you can see that we're able to catch some sales from that very top going down, right? And money was made the whole month of May, simply because of that, right? That's how price moves. Price does not move in a straight line. Even if price is crashing or price is crazy, right? It takes for the market to be really crazy for it to be moving in a straight line. That's what I can say. So like I said, our seasonal tendency is bearish. Then market profile, I expect a retracement at least, or a range, right, or a reversal, meaning that I evaluate my monthly to be bearish. I still reasonably anticipate my monthly bias to be bearish, meaning that I'm hoping to sell above the monthly candle range in order to catch important monthly expansions that may occur to the downside. Yep. So I'm done with the monthly. This is my expectation for the monthly. My draw of liquidity, this very fair value gap, and my bias to be most likely be bearish, right? Then of course, the most important thing as a professional trader is to anticipate a turn of events, right? On the higher time frames, you see this big line up here. That's a draw of liquidity, because on the higher time frames, the order flow is bullish, right? And of course, I had some intricacies also on the higher time frames besides order flow that made me have those anticipations. But going back to what I was saying that it's important to always plan for the opposite to happen. So what kind of opposite might happen? It is when price decides to keep on with the order flow. Instead of price coming down to fill this gap, you may see price respect this bullish PDI to continue with the order flow, meaning that this would be a new draw of liquidity if price plans to move so. But however, the higher probability is for the downside. That's what I can say. And another important thing that I ask you to forgive me of is SMT. not gonna say much about SMT, but you can see that on GU, price bridged the high of the previous month. Not the previous month actually, but price bridged the high of April. And you can see that on euro, the high of April was not bridged, meaning that we have a current discrepancy between the two pairs that suggests a downside move, right? Of course on euro without getting a purge, but on GU getting it. So that's another conviction for my draw of liquidity to at least see price reach this FVG, and another conviction for my buyers to see a bearish June candle. So I've given my verdict on EURUSD on the monthly. I hope you found that insightful, and I hope that you are able to cultivate trade setups of this outlook, right? That are logic, that you can maximize off. Thank you.